Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glen Sutherland.
Welcome to a new episode of A Canadian Investing in the U.S. with Glen Sutherland. This week, my repeat guest, I think we've had you on 4 times, Tim Miron. Tim, you want to start off by just introducing yourselves to everyone?
Yeah, for sure. Great to be back. My name's Tim. I'm a CPA, managing partner of Pursuit CPA with a ton of cross-border clients and expertise. Also an awesome collection of vintage cartoon t-shirts.
Love it. Yeah. Oh, that's awesome. Okay. So a lot of times where I have you on, we're talking tax, or we're talking bookkeeping, or we're talking other things. We're in tax season. We're talking about that sort of thing. And we're right near the end of tax season, I think, right? When we were last month, we were talking about deadlines and timelines and everything else. So we're getting close to the end of that. So one thing that we were going to address was some filing requirements Canadians don't realize they have. Do you want to give people maybe some tips or maybe something interesting or that they might not know about?
Well, I can tell you there's something they might not know about. I'm not sure that it's interesting. However, forgetting to do either of these couple of things is expensive. Okay. So there are 2 Big Brother forms, and we can go over the differences with them. It doesn't take that hard. I call them Big Brother forms because if you file them on time, we don't owe any more income tax with these forms. We have to tell the Canada Revenue Agency that we are doing these things outside of Canada so that they know about them. Okay. The forms are called a T1134 and a T1135. No coincidence that they're one right after the other. I do not know if there's a T1133. That's not something we see in my tax practice.
What's the difference?
So first I was going to go to one thing first is that as Canadian residents, we are required to report all of our worldwide income. Right. So not just the money we earn in Canada. However, when we properly structure things, as we've talked about in previous episodes, some of the money you might be earning in U.S. real estate isn't actually your personal income yet until you get the money. Right. So that's not what we have to do. Under the same premise, we have these 2 forms. So the T1134 is a form that reports to the government, to the CRA, Canada Revenue Agency, that we have ownership of entities outside of Canada. Okay. And depending on how you're structured, so if you are a direct owner of a bunch of entities as we frequently set up in the US, then that person would have to file these forms. However, if you're set up as a Canadian holding company holding your interest in the US, you don't now have to personally file these forms. The Canadian corporation does. So whichever taxpayer has the direct link to our US structure is the one who has to file these. So the T1134 explains what entities we own, right? We often talk about very common, we might have an LLC with an GP-LP structure. And so we get to list all of the entities we have, their US tax filing identities or ID numbers, as well as any transactions we might have had between those two, between the Canadian taxpayer, which again could be a person or a corporation, and those U.S. entities. Again, no tax. However, failure to file those forms comes with a $25 a day penalty to the max of $2,500 plus interest.
Is there a due date on those forms?
There is. That one is an obscure due date. They are so assuming you either are a person or a December year-end corporation, they're actually due like in October.
Okay, so if you're filing this around tax time, or even if you're filing, just a couple weeks later or a month later, or you did any of the extensions, you should be okay as long as you're not really behind.
Yeah, for sure. So that one is got the longer due date, which is obscure. Okay. To be frank, 99% of the time when we're working on somebody's Canadian corporate tax return, whether that's your personal return or your corporate return, we're already there. It's in the same software. We just want to prepare them there.
So how do you expect to, or what's the best way to provide this to you? So do you usually, like, say you had, depending on your situation, if you have an American accountant doing this, they're going to send you all the tax forms, and then you can just use all the names from that. Or if you're doing the Canadian and the US, do you just usually just compile a list of how to do what your ones are? Are you looking to invest in the US? Are you looking for a coach rather than a coaching program? Well, you're in luck because that's where my coaching program is completely different. It's not about just teaching you all the material. It's about like having a community of people all doing the same thing. It's about doing one-on-one calls with me to strategize, to plan, to look over deal analysis, to check markets with you. Just honestly, just to solve mistakes before they happen. If that's interest to you, you want to learn about the coaching program, or you just want to do a one-on-one call with me just for like 10 minutes, just to answer a couple questions, just to get to know me, go to my website, glensutherland.com, or at CanadianInvestingInTheUSA.com, and you can book a call right at the top. And I'd love to get on the phone with you and just even get to know everyone. And see you nodding. So yeah. And then if say you close down entities, does CRA ever go like, what the heck happened to this one?
There's a way to indicate like this is the last time we have this one, right? So if they know, hey, we shut this down in 2025, we're not going to ask for about this entity in 2026.
Okay, so that's something that maybe may have missed on some of my returns, because I don't know if I've ever like formally informed you that some of these have closed up. Like, and we've closed them up in the U.S. and we did all the formal process to do so. But I'm like, we just didn't file taxes because we closed it up before the year end, and that was the final year. And when we did the IRS taxes, we checked the box to say this is the final tax year, but we may not have. Unless that's on the form. I wonder if that's on the form that you'd get.
Yeah, and again, with the continuity that we have from having worked with you for a long time, like knowing, hey, there were 9 entities before. I'm just randomly picking a number. There were 9 entities before, and you only gave us 7 U.S. tax returns this year. Well, clearly we know what happened to the other 2. And again, if you accidentally filed for 9 when it should have been 7, nobody's going to get upset. The bigger issue is if we forget to file at all. Now, if you are listening to this, and the same will apply for the next form, if you're listening to this and you realize that maybe you've been an investor for a couple of years and you've never done this, there is another way we can come clean to the government without potentially incurring interest and penalties. It's called the Voluntary Disclosure Program. So you can kind of use it for one boo-boo a lifetime. So forgetting to file these cross-border forms would be considered, one specific matter. Forgetting to, report the sale of your cottage up in Muskoka, that's a separate one. So like, it's not I only do a voluntary disclosure once in my life, but you can't do it repeatedly for the same thing. So if you're 3 or 4 years behind on one of these forms, we would draft them all up, and we would also do this voluntary disclosure and submit it all at the same time to say, sorry, CRA, we've now learned, because we were listening to Glen's podcast, that we forgot to tell you something and we want to come clean. And so long as the government's never asked you to do it, generally those voluntary disclosures are accepted. And through that program, you now can come clean and get up to date. And if accepted, they will waive the penalties and interest that you would have otherwise paid. So it's a really cool program. It also happens to be the most popular, perhaps the only popular program at the Canada Revenue Agency, because it waives interest and penalties. And so their response time is banana slow. Like, if they get back to you in a year, that's fast. Like 18 months is kind of what we are typically seeing.
Okay. It's kind of even whenever I try to do a reassessment, it takes
a long time.
Year and a half or so to get there.
Yeah.
Like, it takes a long time. And so just to clarify that, voluntary disclosure one time in your life, or it's one time for like one thing you screwed up?
So like one infraction, right? So like kind of like you can get one speeding ticket and have it forgiven.
Yeah.
And the second speeding ticket, if it's the same type of infraction, is not forgiven. But maybe you could
have learned from the first time.
Exactly. Yeah. So yeah, you can't get caught up for 5 years now and have them waive the penalties, and then ignored for 5 years and send in another voluntary disclosure for the same thing, 5 years from now. So.
And what I would honestly probably recommend is, if you are in a situation like this, just so that you know that everything is filed correctly and done the proper way, is I would hire a CPA like Tim to do this all together at once. Because, like you said, you sent it all in together. What I wouldn't want to have happen is you send it in and then you send the other part. Like maybe you filed your taxes electronically and maybe part of this is mail and it all goes in separately and then it's a different thing. And you don't get that voluntary disclosure. When I'm doing anything like this, especially if there's a a high tax bill potential, I would pay a professional to do so. At least that's the way I look at it. Because, like,
Yeah.
hey, I saved myself, I don't know, a few $100 to, possibly incur a massive thousands of dollars in debt. It's just,
Yeah.
or a bill, not
Yeah.
debt.
No, for sure. And I think obviously I'm a little biased on that in that
Yeah.
we're happy to have you pay us to do those things that get you out of that jam. But particularly in this instance, I think it's really important because one of the requirements when you submit a voluntary disclosure is that what you submit on your first try is full and complete, and that if they find that you've missed something, they just throw it out. And then you're stuck with all the penalties, right? So, if you should have sent in 6 years and you sent in 5, now you're going to get to pay penalties on all 6 years.
Yeah.
That's the thing. So,
yeah. And so that might be just, having someone who's experienced looking it over and noticing the little things. Because, I think that's even why people do coaching with me. Because I just, if you've done things 100,000 times and you'll just notice things that other people might have missed and turns into a big expense. Okay. So that was the T1134. What's the T1135?
So this is similar in that it's all about cross-border stuff, but this, see, 1134 has a threshold of entity. And so if you are getting started in investing and maybe you had your entity set up in 25, but you didn't get around to buying something, like that still applies for the 25 year because the entity exists.
Yeah.
The 1135 is a dollar threshold. So once you have $100,000 or more in Canadian dollars, invested in some way, shape, or another across, in this case in the US, but anywhere in the world, you now must report that to the CRA. And we must list all of the assets. So let's say you got started in 25 when investing in some US entities and you took $100,000 off your line of credit or your HELOC or your own savings and transfer that into your US entities. You're now north of the $100,000 mark, and now you must report anything you have anywhere in the world that might be considered investing income. So to delineate the difference, if you happen to own a condo in Florida that you use and you never rent out, that doesn't count as investing. But the second you rent that out for 1 week a year, now it's considered an investment and it would have to go on the list. But it's not just anything over 100,000. Once you cross that threshold, we now need to track down anything that could be considered investing income. So if you've transferred $100,000 into the US as a down payment on some investments, you're off the limit or you're over the limit. If you also have a US dollar bank account at Bank of America that earned you a penny's worth of interest that you use when you travel to the States, that needs to go on the list. If you've got a Euro bank account because you're traveling back home to visit family down there and it earns you $1 worth of interest, that goes on the list. So like it can get kind of bananas. It also applies if you own US stocks, even if they're in a Canadian bank account or investment account. But so that's what it is once you're over the $100,000 threshold, we got to go through every account you may or may not have with a fine tooth comb to go, which of these might need to go on this list.
Yeah, I think it's like a lot of people could find themselves in that situation if they were doing a personal item like you were talking about, and like, a house, and then just they decide to list it on Airbnb for, someone gave them a tip. They weren't even thinking about the tax implications. They list it. Airbnb reports to the IRS. You're now on the list of, accepting income. You've triggered the whole thing. You forgot about it. You didn't think about it because you did it one time because you weren't, and you're like, I don't think I need to file that. And then you get yourself into some crazy penalty situation just over something that was a small amount of money.
Yeah. And I use the example of if it was $100,000 that you put down, but it could be $60,000 that you put down on a US rental property and you own $45,000 of US stocks in a TD Waterhouse account in Canada. Those two combined are over 100,000, and now you get to file this extra piece of paper. Again, doesn't cause any tax. However, it comes with the exact same filing penalties and ability for voluntary disclosure if necessary as the other stuff we just talked about. The only difference is that this form doesn't have an extended due date, so it's due when your return is due. So if you are an individual who gets to file one of these, it's due with your personal tax return, which for most Canadians is April 30th. If you are also considered self-employed, you do get an extra 6 weeks to June 15th. If you're investing through a corporation, it's due on the corporation's filing deadline, which is 6 months after year end. For December year end's often June 30th.
Mm-hmm. And I think if you take anything away from this podcast, I think it's just understanding that you may have messed up and that you should contact someone to fix it at the very least, because you may not realize that you actually have an infraction. And, I think if, you filed a T1134 when you should have, filed a T1135, and the due dates are different. So now you're paying interest on something because you didn't file it on time, could be an issue. So, yeah, I think this is great. I think that there's a lot of people, like we said right at the start, filing requirements Canadians didn't realize they have. And I think that there is a lot of people, even it just popped in my head, but like some people, whenever they set up LLCs, which I know that there's a time and a place to do that in the US. But an LLC doesn't typically have a filing requirement in year one if there's no income. So you may have even went through that, and then you didn't report it to Canada Revenue, which you now have created an issue. Or is that even an issue?
Yep. No, yeah, you're bang on.
Yeah,
yeah.
Because a lot of people do that because it's honestly, it's the bonus of the LLC, and that's why one of the reasons you do an LLC and then do a check the box to change to what you want, because then you can, you set up your entity in the fall and you're not ready to buy until the spring, but you're ready to go, and you're like, I don't need to file taxes because I didn't do anything and the IRS isn't requiring it. So now you got yourself in a situation with CRA, but not the IRS. Interesting. Very interesting.
For sure.
Awesome. Is there anything else I should have asked you about this?
No, those are the two kind of forms that, I wanted that we see a lot of people not necessarily know need to happen. And again, when done properly, they are just a little bit of extra work to go in with your regular taxes, and don't change the tax you owe. But forgetting to tell Big Brother that you were doing stuff outside the country does come with penalties if you,
Oh, yeah. And I think sometimes you just don't realize that you actually had an infraction. Tim, people who are like, I like what you're saying. You sound knowledgeable. Maybe I want to get a consultation call. Maybe I want to figure out how to do this. Where do people go to find you or your company?
Yeah, for sure. You can go to our website, which is www.pursuitcpa.ca. I'm also pretty active on LinkedIn if you wanted to connect with me there and or send me a message that way.
Awesome. I think you probably get a few calls because even myself, I'm always interested. And I did not know about these forms, so I'm always learning and soaking stuff up, and I love it. Thank you so much.
My pleasure.
That was a nice video. Bye.